I'm Chris Preston.
And I'm Brad Simmerman.
Welcome to Street Check, the best podcast in the history of Cabot Wealth Network, which has been delivering investment advice since 1970. Brad, a week ago we had a round table, around the horn, where we had four different analysts on, Cabot analysts on. All six of us were pretty bullish, and by the end of it, I think we were like, I think this might be the sign of a top that we're all this bullish. Well, sure enough, the market is down. Let's see, Nasdaq, I believe, down 5% since then. S&P like more like 3%. How do we keep doing this?
Um, I don't know. I've been trying to downplay our inverse joke a little bit because I don't love feeling like I'm the bad guy, but I still am
Wasn't just
believing
you
that.
this time.
No, but I feel like I'm the holdout, right? I internalize external problems, but I feel like as the resident bear, it's my fault for getting too excited about the market looking forward.
I
Um,
was the most surprised that you were on board. You were Tom Hutchinson, our dividend guy. He was right there with you, and he was a knowing. How did he phrase it? He said, I've been bullied into bullishness.
yeah, I like that.
Yeah, that's a good way to put it. And yeah, well, I mean, it'd have been a heck of a time to, really just be a contrarian. Be, I think this is the top. Uh, and we'll get into whether it was a real top or not. But why don't you tell people what we're going to talk about today?
Yeah, we'll open up the episode talking about the pullback that we were sort of hinting at just now. Talk about CrowdStrike having a very, very bad day today, along with the rest of like the lion's share of the internet. Talking about ASML and Taiwan Semi, who both reported earnings that were pretty solid, but came immediately before hints that there may be more export controls on chips going to China. Then we are going to spend some time talking about gold, which just hit fresh all-time highs a couple of days ago on the 17th of July and is down about 2% today since. And to wrap up, we are going to talk about Cathie Woods and some commentary she had about Nvidia.
Yeah, that's a good tease. So before all that, as usual, let's defend the take. And Brad, you're up this week, and your take, for which you have 90 seconds, is that automation it will be a potential beneficiary of if Trump wins the election in November. You have 90 seconds, go.
So one of the sort of central tenets of Republican policy has been trying to reduce immigration, illegal immigration specifically. That's also something that Biden has done. I think the export levels under Biden have been historically high as well. But it is more of a central theme for the Republican platform. One of the immediate beneficiaries of that is going to be automation, especially industrial automation, because you're going to lose a lot of low cost labor input if you don't have a large immigrant base to do the kind of tasks that most Americans don't want to do and would prefer not to do. Um, we're also in a period where wages have been rising significantly, right? I think we in the last 4 years we've had something like a 7% annualized wage growth rate with inflation being high. If inflation stays high and wages keep climbing, it makes automation far more attractive. One of my concerns with automation is uh, a lot of these companies, or a lot of the funds, I should say, that invest in automation also invest a lot in AI technologies, which I have been a sort of vocal skeptic of, and I continue to be. There's one ETF that I like. It's ROBO. It's an automation ETF that has 44% US exposure with effectively no exposure to China. The international exposure it does have is predominantly in Japan and Germany. Um, it's focused more on industrial automation. So I think it gets away from some of the concerns that I've got about AI being vaporware. It gets away from some of the global concerns that we would have, even though it is a global fund, given that the major opposition is to Chinese technology. So with the policy sort of provisions that I think are likely to be in place in the event that Republicans win in November. Automation benefits, and this fund is an interesting way to play it. It's ROBO.
I gave you an extra 30 seconds or so there, but
Yeah, felt long.
yeah, no, makes sense. Good job talking politics without getting political. But yeah, where's ROBO? What has it done year to date so far?
I don't know. Let me look.
Hold on, hold on. Oh,
Uh,
sorry, I put you on the
all right.
spot. I got it. I got it. It
No,
is.
it
Oh wow, volatile, down 2%, and it was up
yeah,
until this week.
yeah, it's come down a little bit the last couple of days. That's also when I was looking at these, it's still well below its 2021 and 2022 highs. It hasn't, because it doesn't have that AI exposure, it hasn't been a beneficiary of the AI trend. In fact, it's moved more like small caps because it's got a global weighting, so it has investments in small cap companies as well as large cap companies. So I think that the rotation trends that we're seeing are likely to benefit it, as well as that lack of AI exposure, assuming that people keep moving out of the big cap tech names.
Yeah.
Um, I don't, I wish I had more of a timeline. I don't have like, oh, this will be up 20% in a year or 50% in 2 years. I think it's just one of those sort of bigger macro trends that it's worth paying attention to and maybe adding exposure to, especially as you see maybe talking heads start covering automation more. I know it's been one of the platform items for JD Vance, the vice presidential nominee. So something just to put on your radar more than dive headfirst into, especially with what the market's been doing lately.
Okay. Good tip. All right. Well, let's dive headfirst into these next topics. We're doing sort of an extended big three, or it's kind of a big five.
Starting five.
This week, starting five. There you go. There's the basketball term I was looking for. Let's start with the market. What's happened in the last week, as I mentioned at the top, Nasdaq down 5% from its highs. What it was, we sitting here a week ago, seeing the market's praises. S&P down about 3%. Do you think this is start of something larger, or is this market rotation? We've been complaining about how thin the rally's been and how, tech, especially a handful of tech stocks, might have been overcooked. And tech is certainly leading the charge downward. What do you think this is?
Monday and Tuesday, I would have said it's classic rotation.
Yeah.
Even looking at like the Russell 2000 for this week, it was up like 11% from the end of last week until like Wednesday, I believe. And then it's given back a little bit since then. It looks like a little bit of short-term profit taking, nothing out of the ordinary on the Russell. And it looked like healthy rotation out of big tech. The controls on chips that we'll talk about later, I think maybe spooked the market a little bit. My sort of big picture stance on it is that we're really highly valued. Big cap tech is, and because of that, the Nasdaq and the S&P are. So they're going to be hypersensitive to externalities, but it doesn't look unhealthy yet. Like what happens at okay, it's a 5% pullback. All right, maybe it turns into a 10% pullback. It's not enough to invalidate the trend. Both the S&P and the Nasdaq are sort of approaching their 50-day moving averages, which is the first spot that I would look technically, since it is heading in that direction. I would expect it's going to find support there, but you never know what is going to happen in the world that might cause people to sort of rethink their bull theses.
Yeah, well, so what happens in the world? You brought that part up. A lot has happened since we last recorded this podcast that could be having an effect, or at least in the aggregate, these might be having an effect. There was an assassination attempt on one of the presidential candidates and former presidents. The other candidate, his party's actively trying to remove. So we may not get the known Trump versus Biden which has been known for some time by the market. I guess that's their comfort food. They may have an unknown in there potentially, and right now it's an unknown whether we'll have, you know, someone else in there. Then you add on what's happened, and we'll get to this in a little more detail in a minute. What's happened with China, Taiwan, and some language around semiconductors, chips. There's been a lot that's happened in the last week to disrupt the market. Sprinkle in the fact that it was all-time highs coming in, and you live by big tech, you die by big tech,
Yeah.
and that seems to be what's happening a bit right now.
Yeah, Michael Brush shared something internally with us, just pointing to seasonality being kind of tough in, as we approach that August, September window in election years. So it's not out of character to see a little bit of profit taking. I don't know. Nobody's going to yell at you for taking chips off the table when you're up 100% in like the last 5 years on the S&P 500, and that's the case for essentially everybody that's invested. So
Yep.
yeah, if things start looking a little dicey or start feeling a little hairy and you pull back, and everybody does that, it has a little bit of an outsized impact, and especially when you already had rotation start in what otherwise looked like a really healthy bull market a week ago, right?
Yep.
So a little bit of hesitancy on top of normal rotation ahead of interest rate cuts, maybe as soon as 2 weeks from now.
Yep.
Still an outside shot there, but that
Yeah.
seems like, I don't know, bad news stacked on top of normal rotation. It's not. It certainly doesn't have me quaking in my boots. Although
No.
the VIX picked up a little bit. I think was up to 16 yesterday, but it's still well below historical averages. So
Right. I mean, look, in April, the S&P was down what, 6%, 6 or 7%? I think NASDAQ was more like 8, 9%. And that was about a month long. And that feels like a blip in the past, what, 8 months since this rally started last November. It's possible this will feel that way, but it's also possible. I mean, I've talked about how market weakness, as you near an election is kind of the norm. Usually it starts a little later, but when you sprinkle in that people are penciling in the first rate cut in 2 months, maybe that's sort of the timeline more than the election at the moment. I don't know, but it's 1 week, and like you said, yeah, if it gets to 2, 3 weeks, we're still headed downward. Then maybe we'll have something a little bit more to fear, for lack of a better word. But yeah, I don't know if I'm quaking in my boots just yet either. Number two, speaking of dying by big tech, Crowdstrike, stock that Cabot has liked, cybersecurity stock, had a very bad day or night. So they're basically, was it a Microsoft or sorry, a Windows related update went awry, and it crashed basically the entire global tech system. Airlines grounded, and I went into a
yeah,
Starbucks this morning and their stuff was down, so they had people on iPads up front taking mobile orders.
yeah,
uh,
CrowdStrike rolled out an update to um, Microsoft computers that, as I understand it, was a kernel update that essentially just bricked the computers,
right.
caused them to go into like a blue screen of death, right? If you're a PC owner, you're familiar with that. Um, but it essentially just locks up the system, and then it prevented major airlines from operating. As I had seen, there were airlines that were having to like manually check people into flights, but it didn't disrupt all air travel. It was a system issue, but it resulted in um, Delta, United, and I think maybe Southwest basically grounding all flights. Um, there were some financial institutions, hospitals that were impacted. It was a really bad tech rollout, but as I understand it, they got a fix implemented pretty quickly and were able to reverse it. And a lot of those systems are sort of back in effect. Um,
It
right
wasn't a
now,
hack. It was not a
no.
hack, which is what the initial impression was. And if you're a cybersecurity company that gets hacked and takes down the whole global system, that might have been like a death knell potentially for CrowdStrike. It seems
Yeah,
more like a
it's sloppy work.
yeah,
It's a bad update that they rolled out. It happens with technology all the time. I mean, if you've updated your iPhone, you've probably gotten an update from Apple, and then a few days later you see a fix get rolled out. It's fairly common. Um, but if you are probably the premier, or at least one of the most well-known, as you said, security providing technology companies, you sort of have to be perfect.
right,
Like you're
right,
like an offensive lineman. Nobody notices you until you screw up.
right. That's a good way.
Um,
Yeah.
so
Mike compared it in his letter to his readers this morning to when Chipotle started. I think it was Mike, or was it you? And I think it was Mike. Was it back in 2016 when they started poisoning customers all over the country accidentally?
yep.
E. coli, I think it was, or different bacterias. Um, that may have been a little different when you're a food company that and the food is bad. But I don't know. Maybe it is pretty similar.
I like
But
the I like the
yeah,
analogy,
yeah,
right? Like the baseline level of performance you expect from any restaurant is that it's not going to make you sick,
yeah,
right? It might not be the best food in the world, but as long as it doesn't make you sick, it's delivering on its baseline. That's sort of a similar expectation with what people have with technology. As long as it doesn't break my entire system, or as long as it doesn't prevent me from using my tech stack entirely, even if you don't catch every security threat, or even if you are slow to maybe adapt to one, okay, that's sort of understandable. But when you start bricking computers, you're violating that sort of baseline standard of performance, which
yeah,
I think is part of, it's one part of why Crowd has been hammered. It's down 12% right now today. But one of the things that I was looking at, it's trading at a PE of 548 right now.
hmm
Um, and we were just talking about how overbought tech was appearing and how we were seeing rotation into other undervalued names. You just don't have as much margin for error when you're priced to perfection, whether that comes to earnings reports that are not killing it, or when it comes to making technical mistakes. When you are priced to perfection, you're priced to perfection on all fronts, and that means that these mistakes that Intel's not going to go down 12% if it was a flaw in Intel chips, right? Especially if it was something where it was like a software flaw where they could roll out an easy fix. Um, you wouldn't see that same kind of response from something that was more fairly valued. So,
yeah. No, I agree. Yeah, and it's only down to it's right up against its June lows from last month. So far the damage has been sort of orderly. It did peak as high as 392 beginning of this month. So it's down from 392 to 300. So that's not nothing. But Chipotle, we're following that analogy. Chipotle did eventually bounce back, and it's fine now, but took some time. So might not be the best time to on CrowdStrike.
well,
Something I'll have to
the
read
other
about.
thing is, all right, so you and I, we work for a company, right? We've gone through technical upgrades and we've changed technical service providers and stuff. There's a really high threshold for somebody like Microsoft to come in and say, you know what, we're going to stop allowing CrowdStrike with all these organizations that rely on Microsoft, or with us as a provider. We're going to change business partners, and we're going to find an entirely new security company to use. It's it would need to be cataclysmic, I guess.
Hmm.
Like there's I just can't imagine that Microsoft essentially cuts ties with CrowdStrike
Yeah.
over one bad update, because the amount of work that you have to put into evolving your tech stack is is such a hill to climb that it just doesn't seem feasible.
Yeah,
So,
probably not. Yeah, like I said, if this was an actual security breach, you might have seen that, but that's not what not what it was. Okay, sticking with tech, but shifting to earnings season, which is underway. There've been some earnings blowups, namely around tech, and chief among them ASML and Taiwan Semiconductor, two semiconductor chip making stocks, had not great reactions to earnings, but also there's a lot going on with chips beyond just earnings now. So it's hard. It seems like just based on those, it's too hard to tell or too hard to declare, too early to declare that this might be a repeat of last. If as people recall, and Mike brought this up the other day on a company call, that last Q2 earnings season was notorious for all the earnings blowups for companies that beat earnings. Tech companies, especially that were up at new highs or whatever, would fall 10-12% on perfectly fine earnings. And that's kind of what happened with ASML and Taiwan Semiconductor, but you got to consider it may not be about that right now.
Yeah, ASML is down 18% in the last 5 days.
Yeah.
They beat earnings. Believe they beat earnings and revenues expectations, but they didn't raise guidance.
Right.
Taiwan Semi is down just about 12% in the last 5 days. They also beat earnings and revenues, and they did raise guidance, but either not as much as the market was hoping for, or it's just sensitivity to threats of more restrictions on exporting chips and chip manufacturing equipment to China. ASML predominantly makes lithography machines and chip making equipment. Taiwan Semi obviously does most of the actual fabrication work. So if they can't, I think 50% of ASML sales were to China in the last quarter. I don't know about this quarter, or at least 50% of like their lower cost older machines. I don't want to conflate those two numbers, but China is the buyer of ASML technologies. I don't know how much of TSM's output goes to China, but it's a problem for them if there are stricter controls on it. And it really does feel like it's in line with what has been the theme that we've been talking about so far, which is everything's priced for perfection. Everything looks healthy. Everything looks great. A little bit of bad news causes some overreactions, or at least what in the moment looks like an overreaction. I mean, we'll have to sort of wait and see, but I don't think it was an earnings response so much as it was.
Right. Yeah. And even if it was earnings response, my strategy last year when this was happening to a bunch of tech companies, including ones in my stock of the week portfolio, was hang in there, give it some time, see if it bounces back, because chances are a lot of these will, when you get beat up on perfectly fine earnings. If there was a problem with the earnings, that would be a different story. But similarly, if you own either of those stocks, it's probably worth hanging in there. If you don't, it could be a buying opportunity, honestly. There's more, like you said, there's more than just, these are more than just earnings blowups, or maybe, not even related to earnings. But I don't know that this is, like the beginning of the end for these companies. This is an awful lot of selling off in a matter of just a few days.
Yeah, I think taking it probably on a case by case basis
Yeah.
before the stuff you own releases their earnings report is probably a smart move.
Yeah.
If you've got a ton of profit cushion in something that you've had for a long time, maybe let them report and see what the response is. If you don't have a ton of profit cushion, maybe taking some off the table. You sort of want to avoid just market selling immediately at the open,
Yeah.
because that's when the reaction to the prior day's earnings report is going to be most pronounced. It's going to be everybody that just says, I want out and I don't care at what price or when. That's what a market open sell says.
Right.
The people that are saying, you know what, I'm going to give this some time. I'm going to reconsider whether this changes my base case for the stock or for the fund or for the investment. Those are the ones that are trading later throughout the day. So you just want to take whatever steps you need to take to feel comfortable holding through earnings. If you don't feel comfortable holding through earnings, then you're overexposed to it. So pare back your exposure. Cut a 10% position down to 5%. Um, Buy a put, sell some covered calls, go and take advantage of the elevated implied volatility. Like maybe it pulls you out if the stock rockets on a really good earnings report. But get yourself comfortable so that you can make a rational choice after the number because you're not trading overnight anyway. I mean, not if you have a sizable position. Yeah, if you're on, Robinhood and you have one of their 24-hour stocks, yes, you can and get out in the after hours, but it tends to be illiquid. You tend to see wide price swings. And even then, you still get an immediate reaction to whatever the earnings report is. So just uh, get yourself to a place where you feel comfortable. I think we're going to see more of what we've already been seeing this week. People are a little bit on edge.
Yeah. So speaking of on edge, it brings us to number four. Gold is, or at least was until the last day or two, at all-time highs, near 2,500 an ounce. Um, you know, it's interesting. It's pulled back with stocks the last couple of days. Prior to that, it was on the way up. It's been they've had set new highs. Gold set new highs pretty much every month or two. The last 5-6 months. Where do you think gold goes from here, and where do you think gold miners go from here?
So Cliff actually wrote a daily article that's going to run Monday that I had the privilege of reading before we started recording.
Cliff Droke, our
Cliff,
metals expert.
yep, he has been a guest on this podcast. Always offers some really good insights when it comes to metals. One of the things he pointed at is that there ongoing weakness in China is muting some of the impact of what had been their really ravenous gold buying. They were buying a ton of gold. It was sort of unclear exactly what the catalyst for them to be buying gold at the time was, but they had been big net buyers of gold for the last few months. That was part of what drove it up to that 2,400 price. Um, but what we've seen more of lately is some short-term profit taking from gold hitting all-time highs.
Mhm.
We've seen people that got in late getting sort of stopped out. There was some interesting analysis that Reuters and Kitcode reported about what they call week longs. So people that bought at the highs, taking losses, and then effectively just getting stopped out. But ultimately, the thing that's going to drive gold prices higher is lower rates and a weaker dollar. And both of those seem to still very much be in the cards. Even, regardless of what the November outcome is, the Fed is poised to start cutting rates maybe in 2 weeks, maybe in 2 months. We don't know.
Yeah.
But the expectations are near 100% that there will be a Fed rate cut by September. That's good for gold. So regardless of whether there is intentional dollar weakening, which has been floated a little bit by the Republican administration or by the candidates for the Republican administration, by Vance specifically. There are a lot of other bullish catalysts that are in place for gold. I'm still a net buyer of gold, right? Like I think I was on here a few weeks or a few months ago saying, yeah, dollar cost average, just put little bits into gold while it sort of oscillates up and down. It's still really favorable conditions for it. I like it.
Yeah.
It is at historically all-time highs. Inflation adjusted, I think it's trading near levels that it was at back in the 1980s. So that's maybe a yellow flag, but
Yeah.
I don't really see a lot of negative catalysts for it.
Yeah. Cliff was on here not too long ago. And actually on a call this week, he said gold is the one metal he's still high on, even at all-time highs. He said silver is sort of fallen off. There's nothing else that's really, sometimes he'll do copper or like tin or lithium. He didn't, he wasn't high on any of those right now. But gold, he's still high on even at these prices. I in my Cabot Value Investor newsletter, which is value investing portfolio, I just sold a gold stock that was up 34% in just under 4 months. Ignico Eagle Mines, I can say it now because it's not in the portfolio anymore. AEM. But that was purely, it reached the price target. That's purely it was technically overvalued. It had become overvalued. But as I sort of said when I sold it, like if this was a growth investing ETF, I'd let it ride. Maybe probably take some partial profits and then let the rest ride. So yeah, similar to averaging in or booking some profits and letting the rest ride. I think that's there's not much, at least in the last week, that has a ton of momentum. Gold, despite the last day or two, is still has plenty of momentum. Maybe even the last couple down days could be a good chance to average in. But yeah, I agree. Ride the horse until it runs out of, gas is the wrong word, energy.
Never heard that metaphor.
Yeah.
So have you considered, or are you considering maybe opening a new minor position?
Not in value, no. But maybe it's not, as I mentioned, I also run our stock of the week investment advisory, which is basically I get to pick and choose all the best, or what I think are the best stock picks from all our many other newsletters, our many other analysts. And a few of them are still recommending gold. So I may be adding one to that portfolio, soon, maybe even next couple of weeks. I know that's been all over Mike's Cabot Top 10 Trader Advisory, which is just a momentum stock service. 10 of the strongest stocks every single week. Puts it out every Monday. And gold stock's been all over that because it's had plenty of momentum. So yeah, I may be getting back into it very soon. But I don't think you need to sell gold now, sell out of all your gold stocks now, just as sort of a to preempt a possible fall in gold just because it's all-time highs.
No, but if you make 9% a month, closing a position when it hits your price target in 4 months is a pretty solid way to do it.
Yeah, no, I was happy to do that. Yeah.
That's the one that you hate to sell, where it's like, all right, well, it hit my target, it did it way too fast, so I guess I'll get rid of it.
Yeah, and if the fundamental, if it hit my target and it was still trading, like 12 times earnings or something, I would have said, all right, let's up the target. But it was a little more inflated than that. Okay, our last topic is the most fun one of the day. Cathie Wood, who runs ARK Invest. Let's see, no net progress in that ETF the last 5 years. She said, you think you have the direct quote, but I'll just paraphrase here. She said, I wouldn't have sold Nvidia if I'd known it was going to do this. I don't know when she sold it exactly.
Yeah, let me.
It goes for every person who's ever invested. Like, yeah. I mean, there's a million stocks that I wouldn't have sold. Heck, I owned Nvidia was the first stock when I started investing individually. First stock I bought, almost a decade ago. And I got shaken out of it in 2019. It was down a lot, and I got spooked and didn't get back in quick enough. But why even say that? Of course, yeah. Who knows what a stock is going to do? If people act like they do, but this is why we always talk about how our crystal ball is broken here.
So her full quote was this. She shared this via X/Twitter. Before selling Nvidia in ARKK, had we known that the market was going to reward it and the other Mag 6 stocks to the exclusion of stocks that will be the prime beneficiaries of AI, like Tesla, the largest AI project on Earth, and multiomics names like RXRX, we would have held it. Yeah, I don't know. I mean, ARK has a $2,800 price target on Tesla. Um, there have been numerous headlines and commentators saying that ARK Funds is the largest wealth destroying fund in existence, right? The whole family of funds. Um,
How do you have a tech? How do you have a tech ETF that in the last year, 2 years, let's say year,
the
or year and a half, is down? I don't. I mean, that's hard to do.
she sold it, I think, right, like almost immediately before it started skyrocketing, in like 2022, so maybe spring of 2022, and then it really started running at the end of 2022 and into 2023. I don't the thing that frustrates me about it is we all make bad calls. Like you and I have entire episodes that are dedicated to punishing ourselves for making bad calls.
Yeah.
It is such a disingenuous thing for you to be a fund manager and come out and say, "Hey, if I would have known this was going to make a lot of money, I would have bought it." At least treat your audience like they're capable of some serious consideration and say, "Hey, look, yes, Nvidia was the obvious beneficiary." I I said Nvidia in like 20 end of 2022. I was like, "Hey, Nvidia is going to be good for AI. The machine learning thing, it's good for Nvidia." I also said Nvidia was overvalued at like 600 and then again at like 900. And I'm saying it again at
I think a few months
1
ago, right?
119. Yes, I continue to
Yeah.
think it's overvalued.
Yeah.
The thing that I do for our audience is I say, here's my rationale. Here's why I think it's overvalued. Then you can make your own assessment. But for Cathie Woods to come out and say, if we would have known it was going up, we wouldn't have bought it or we wouldn't have sold it. That's sort of a no blank Sherlock kind of
I know. I
statement.
was trying to think of a way to say that. No, duh. I guess is the
Yeah.
the
Te-
first grade word I would
Tell
use.
me what your alternative thought process was that made you think that the most obvious play for machine learning was a bad idea, right? Then I can make an assessment on your credibility as a multi-billion dollar fund manager instead of just having to take your word that you didn't think it was going to go up without trying to explain why. She has a
Just
fiduciary
become a
duty.
punchline.
Yeah, and she should be.
I
She
mean,
has
look
a
at the returns. Yeah, she should be.
she has a duty to her shareholders to operate or to the fund investors to operate the fund to the best of her ability. So part of that is making calls, making judgment calls where real people's money is on the line.
Yep.
When you make the bad call, tell us why. Tell us why it's a mistake and not a result of a bad thought process and a bad investment thesis.
Yeah. That's why we will continue to point out our own bad calls on this show,
Yeah.
and I think, and our guests, as I think we did when we had Tyler on last week. Uh, what was his? Oh, no rate
No
cuts
rate
threatened
cuts.
here. Yeah, it still hasn't happened technically, but I think that's going to be wrong. Um, just want to mention, quick. I touched on Top 10 Trader a minute ago. It's Mike Santolo's weekly momentum investing service. Again, 10 of the stocks in the market that have the most momentum. um, it's every Monday. I highly recommend subscribing to it. It's pretty cheap for what it is. I mean, it's literally what, 10 every week, like 500 stocks a year that you get. And Mike is one of the best market timers out there. He's been honored for it almost every year by Market Timers Digest. So he not only gives you buy ranges on every stock that he likes, but he also gives you tells you when it's time to get out. Gives you sell stop or stop loss ranges as well. It's on the cabotwealth.com website under Premium Advisories tab. Cabot Top 10 Trader. I highly recommend subscribing. Mike has made a lot of people a lot of money, and I encourage you to do it because you will almost certainly make your money back by and then some by subscribing. Anything else we want to touch on before we go?
Yeah, I want to say one other thing about top 10. the best performing stock in the history of stock of the week was originally a top 10 stock,
Yes.
right? So these are early momentum stocks, and momentum tends to beget additional momentum.
Yeah.
So
Let's just say it. Mike picked Tesla in late 2011, and that was a good call.
yeah. But it's not just Tesla. Like he'll the stuff that the stuff that goes in top 10 is the same kind of stuff that eventually feeds into some of the other growth products.
Right.
Obviously,
Yeah.
it's a different management style, or a different analysis style, but the stuff that we're looking at, especially when it comes to growth stocks, if it's on our radar, there's a pretty good shot that it is in top 10, or that's on Mike's radar there as well. So it is a little bit closer to some of the early stage investing stuff like Tyler specializes in, but with an emphasis more on picking up early signs of momentum instead of picking up these undiscovered companies.
Yep. Yeah. Cabot Top 10 Trader. Check it out. And as always, if you're thank you for listening or watching today. Like and subscribe. Uh, give us a 5-star rating, all that good stuff. We will be back next week. Who knows how? I mean, wow, a lot of changes in the past week. Who knows what the next week will bring? But I'm sure we'll have lots to discuss. Thanks for joining Street Check, and we will see you again next week.